Good morning and welcome to today's KraneShares webinar. China Economic Update and Outlook with Gavekal Research. My name is Brendan Ahern. I'm the Chief Investment Officer here at KraneShares Exchange Traded Funds. And I'm happy to welcome Arthur Kroeber, the founding partner and head of research at Gavekal Dragonomics. Arthur, it's a pleasure to have you here in our office. I've been a long-time reader of your work, and I'm really excited for our conversation. Really glean your thoughts on what's happening in terms of China's economy. A lot happening, but very quickly, just some housekeeping. Arthur and I are going to have a conversation, but we really want to get audience participation. So please email us. If you're joining us from KraneShares.com, please email us at info@KraneShares.com to ask questions that I can propose to Arthur. If you're joining us on the Zoom, please use the Q&A button. We want this to be as interactive as possible. We are having CFP and SEMA continuing ed credits. Please email us at ce@KraneShares.com. That's Charlie Edward at KraneShares.com. And let's dive right in very quickly. For those of you less familiar with KraneShares, our founder, Jonathan Crane, moved to China in 2001, where he built a business geared to China's growing urban middle class. Living in Shanghai, he experienced firsthand how China's population was adopting mobile technologies as well as other new economic drivers to push the economy forward away from traditional old economics drivers. Secondarily, Jonathan experienced, especially since he moved to China in 2001, when the first foreign investor was allowed to invest in China's mainland, that's the onshore Shanghai Shenzhen market, in 2001. But over his time in China, that level of access into China, that door was widening, it was opening up. Ultimately, John sold that business to U.S. multinational, moved back here to New York, where he was shocked to discover that the China ETFs, as well as China's exposure within broader emerging markets, was all old China. There was little to no new China economic sectors in market indices, as well as the definition of China did not include the second largest stock market in the world. That's the Shanghai and Shenzhen stock exchanges market cap taken together. The definition was solely Chinese companies listed in Hong Kong, nor did it include any of the Chinese companies that had listed here on the New York or NASDAQ exchanges. And that was really the fruition, the impetus to creating KraneShares, a China-focused ETF provider. Obviously, we're very well known for KWEB, our China Internet ETF, the largest China ETF here in the United States. Coincidentally, we listed KWEB on the Abu Dhabi exchange yesterday. And today with our partners at ICBC, we actually listed KWEB on the Hong Kong exchange. But there's other elements of our new China efforts like clean technology, China healthcare. We've also taken trends we see in China that we think will be global in nature, which led to cars are one of the first global electric vehicle ETFs. More recently, we did COID, a global humanoid robotics ETF. We've also listed ETFs with partners such as Nancy Davis of Quadratic Capital with iVol, or Mount Lucas, a managed futures firm, Man Group, as well as Hedgeye Research. Also, we're very well known for our pioneering efforts in making carbon credit allowance futures ETFs available. Those research efforts are led by our colleague Luke Oliver. But with that, let's dive right in with a conversation with Arthur. Arthur, I always like to ask people, who are you? How do you end up here? Just a little bit more about yourself and how you ended up in China.
Yes, well, thanks very much, Brendan, for inviting me to have this conversation. I'm very much looking forward to it. There's obviously a lot to talk about. And yeah, I would say that I kind of stumbled into China almost by accident. I actually went to college intending to study Chinese back in the early 80s before anyone was interested. In those days, it was all about Japan. I got sidetracked into other things, as one does in college, but then I got interested in journalism
Mhm.
and gravitated towards financial and economic journalism. Wound up in Asia in the late 1980s.
Wow.
And then China in the early 1990s was just beginning to
Hmm.
take off, and was undergoing a gigantic investment boom, uh, which created a lot of problems, but also a lot of dynamism.
Hmm.
So I moved to China in the early 1990s and did a variety of essentially freelance economic and financial journalism for about a decade. And then in 2002, I set up my own company,
Okay.
Dragonomics, to look at it more systematically, and I've been there ever since. I'm actually living back now in New York, but I spent about the first 15 years that I was running Dragonomics based in Beijing, immersed in the situation
Hmm.
in China.
Yeah, and in full disclosure, I mean, we are subscribers to Gavekal Dragonomics. That we love your work. You and the team, you're prolific. It's at times hard to keep up with all the great research you're
I have
doing.
trouble keeping track of it myself
Uh,
sometimes. Yeah.
but obviously Gavekal Dragonomics, great balanced data driven perspective, which is really a lot of our research efforts are very similar to line. But what is your take on China's economy? Um, and let's just maybe start there, and then we can talk about, because obviously we've had the draft of the 15-year plan, we had the
Right.
Politburo release, and then the Central Economic Work Conference today.
Yeah.
But big picture,
Right.
what's the lay of the land?
Yeah. So there's a lot of details, and obviously, when we started Dragonomics, we published basically once a month.
Hmm.
And now we publish 3 times a week. And that, I think, testifies both to the way in which China's grown and become much more complex, much
Hmm.
more multifaceted, but also to the degree of interest that people
Hmm.
have. 25 years ago is very niche interest. And now I think even if you don't have direct exposure to China as an investor, you have to know about what's going on there,
Hmm.
because what happens in China doesn't stay in China.
Yeah,
It
yeah.
affects the entire world. And that is increasingly true in more and more sectors. So, in terms of what I and my team think about China, the basic story is there's kind of a two-track economy.
Hmm.
Um, and if you look at the macro economy, the big picture GDP
Hmm.
numbers and so forth, it's kind of sluggish. And it's been sluggish since the country emerged from the COVID pandemic in early
Hmm.
2023. Um, you have a sustained problem of weak consumer confidence, which cycles into weak business confidence. Basically, consumers are concerned because the main asset on their balance sheet is their housing.
Yep.
China's gone through a massive housing bust
Yep.
over the last 5 years, triggered by the government, which
Yeah.
thought that the housing market had gotten too big, too speculative,
Yep.
and they deliberately have tried to shrink it,
Hmm.
which I think is the right macro call,
Yep.
but it's been very, very difficult for households to see their wealth contract in this way. Uh, and then the other thing is that they don't see companies hiring as much as they used to, or offering the same kind of wage growth. So on the income side, they're looking at a soft labor market, less job opportunities,
Hmm.
less income growth. On the asset side, they're looking at their housing assets shrinking. So they're saying, why should I spend?
Hmm.
I'm going to just save all my money, hoard it,
Yeah.
and be very, very conservative. They have plenty of money. There's enormous household savings, but it's
Hmm.
not like people are poor. No one's underwater on their mortgages.
Hmm.
You don't have those kinds of things, but just a very, very cautious, conservative household dynamic.
Hmm.
And then businesses who look at the consumer say, well, why should I invest and hire more people if people aren't buying? And then so you get a negative feedback
Yes.
loop of weak consumer confidence and weak private sector confidence. So that's one part of the story. And the government has been dealing with that by expanding fiscal support,
Hmm.
putting a little bit more money into consumers' pockets. And basically, what the government is trying to do is make sure that growth doesn't fall below a certain level. So
Hmm.
they kind of put a floor under growth, but they're not doing more to stimulate a big boom. So
Hmm.
they're also being a little bit conservative in how they approach management of the macroeconomy. And it's basically saying as long as we can keep growing by 4 or 5%, we're fine, and we're not going to
Hmm.
push harder than that. So the macroeconomy is pretty sluggish, and we would anticipate that that continues to be the case at least for the next year. We
Hmm.
don't really see a trigger for a major change in that dynamic. But if you look at the technology manufacturing side of the economy, it is absolutely booming.
Yeah.
Uh, and part of this is the result of the government's desire to shrink the property sector. So about 5 years ago, they said,
Mm-hmm.
the property is too big, we need to shrink it. It's been a big driver of growth, so we need another growth driver. And we look at our relationship with the United States, it's very contentious. The US is putting all of these export controls and tariffs on us. And so it's much harder for us to compete in the global economy unless we control our own technology and we're not exposed to all this pressure from the
Mm-hmm.
US. So both because they needed a new growth driver and because they felt that they needed to build Fortress China to push back against US pressure, they said, let's take all of this money that's been invested in the property sector and move it over into the high tech manufacturing
Mm-hmm.
sector. And so if you look just at the bank sector, which is the main source of corporate finance in
Mm-hmm.
China, uh, loans um, to the industrial sector, to
Mm-hmm.
mainly to high tech manufacturing, grew by a factor of 6 between
Hmm.
um, 2019 and 2023. In the span of 4 years, they sextupled the amount of capital that was available just through the banking sector in
Mm-hmm.
high tech manufacturing. And so, no wonder you got an enormous boom in people making all kinds
Yep.
of stuff.
Mm.
And where we've seen that, I think, globally is most visibly in electric vehicles, where they've
Yes.
gone from basically not a player in the global car industry to the leading car exporter
Mm-hmm.
in the world
For
in the span
sure.
of less than five
Yeah, yeah.
years. And they're exporting both conventional cars and electrics, but the growth is clearly in
Yeah,
electric.
yeah.
If you look at sales within China, the majority of new car sales are now
Yeah.
electric or hybrid vehicles.
Yep.
They're making that transition much more rapidly than
Yep.
anyone else, and they're competing not just in cost. The manufacturers from the U.S., from Japan, from Germany, they all go to the Chinese auto shows, and their conclusion is that in the electric vehicle space, Chinese cars are not only the lowest cost, but they're also the best in terms of the technology, in
Yeah,
terms
yeah.
of the battery management, in terms of all the software systems.
Mm-hmm.
They are first-rate vehicles. And
Mm.
this is something I think that's quite new because we're used to thinking of China as the place where you get cheap stuff that maybe is okay, but it's
Yeah.
not at the global leading edge. And so what you see is that in cars particularly, but you also see it throughout the green energy space. You're increasingly seeing it in things like industrial
Mm-hmm.
robotics. Um, um, that China is building up technological capacities
Yep.
that enable them to compete not just on price,
For sure.
but on technological competence. And so, on the one hand, you have a sluggish
Mm-hmm.
general economy with weak consumer confidence. On the other hand, you have a manufacturing economy that is just really, really good at what it does, excellent at figuring out how to cut costs and be more efficient, but is also increasing the speed with which it moves up the technological
Mm-hmm.
value chain. So those are
Mm.
the two features of the Chinese economy that you have to deal with today, and that obviously creates some challenges for investors.
Yeah, I think one of the great slides you have, and you've generously, we don't want to walk through a deck, but if you would like Arthur's presentation, please email us at info@kraneshares.com, and Arthur has very generously allowed us to pass along his research. But I think one of the great slides that you and the team have spoken about is showing that property investment. Everyone noticed it declined,
Yeah.
but you have this great slide where you show how that money actually just got kind of repushed into this. And
Repurposed. That's
yeah,
right.
yeah, it's
Yeah.
it's amazing, and
Yeah.
you're seeing, I think, the fruits of that investment. If it's obviously hard to ignore in the hybrid EV space, but certainly clean technology. Now maybe you're starting to seeing it a little bit when in the semiconductor
Right.
space, Cambercon, more recently more thread.
Right.
Um, but I think certainly I think one of the things that we've experienced going to BYD's headquarters, and one of their 10 factories in China and
Mhm.
Shenzhen is just, these are great cars. I
Right.
mean, just if you're a car person, the
Right.
fact that it's Chinese, the fact that it's an EV or a hybrid, you wouldn't even know. They're just great cars. And
Yeah.
I actually personally, we have this reshoring, bring it all back narrative, I just think it's going to be hard to take that industrial manufacturing ecosystem
Right.
and just say, okay, we're going to instantly do it here. I'm
Yeah.
just a little bit of a skeptic. I mean, I think maybe some industries that COVID, the supply chain issues, there's things that have to be made here. You know, chips from for the Defense Department.
Right.
You know, maybe some healthcare. You know, steel. But beyond that, I think it'd be really hard to bring that back. And then obviously the environment. You know, is there
Right.
tolerance from an environmental consequence?
Yeah.
Um, that in say rare earth processing.
Right.
I don't know. I don't.
Yeah, no, that's a really good point. I think it's really important for people, both investors and policymakers in the United States to think about this quite carefully. So a point that I and the team have made repeatedly in our research is that, I think when people who haven't studied it closely look at China and they see these successes and they say, oh, well, it's just because the government was willing to subsidize all of these individual
Right, right.
sectors. And when the money runs out, the dynamism will run out, and that just is not true.
Yeah,
Right?
yeah.
No question. There's been a lot of subsidies, right? So government support has been a big part. They took a big bet on green energy and electric vehicles way back in 2006, when no one cared or thought that was
Right.
interesting in the rest of the world, and they stuck with it through more than a decade of lawfare. And if there hadn't been that state support, they wouldn't be where they
Yeah.
are now. So we have to acknowledge that that's a big part of it. But China is two things. It's this big state that is able to mobilize resources and take very long, sustained, money losing bets on new industries for a long time. That's part of it. But there's also this incredibly dynamic ecosystem of private sector companies below, which is cutthroat Hunger Games style competition.
For sure.
And I think people who think of China as a communist, sort of centrally controlled economy don't quite realize just how competitive the industrial sector is. It's not state-owned companies. It's mainly companies that are run by founder entrepreneurs.
Yes.
Who are really hungry and very, very attuned to what they need to succeed both in the domestic and the global marketplaces, and are very market driven. So it's the combination of these two factors that creates the strength of the Chinese ecosystem. And so what you get as a result is the government is able to invest in a lot of the systems like electric power and logistics and all the infrastructure that is very available and very low cost. And basically, you're a private entrepreneur, you can plug into this low cost infrastructure. And then the other part of this is that, for 30 years, China has been the center of the global consumer electronics industry.
For sure.
And so you've built up this whole ecosystem of people who are supplying all the components for consumer electronics. And then they diversify into other areas. And so if you want to prototype a new product, you call up the guy down the road and say, I need, 5 samples of this new thing that we just thought of, and I need them, in 2 days. Can you do that? And the guy will say yes, and here they are.
Right.
And if you talk to any startup entrepreneur in the US who's trying to do similar kinds of things, they can't get those kinds of prototypes done at home at all, or only with long lead times and ridiculous cost. And so the ability to try out new things and then iterate them and say, okay, well, that was the prototype. Now we need the next version with these improvements, blah, blah, blah.
Right.
You can just cycle that very quickly. And one of the great examples of this is one of the interesting electric vehicle makers in China today is a company called Xiaomi, which a couple years ago developed a car that was capable of winning a major road race in Germany that's used as kind of a test case for new vehicle.
Yeah.
Xiaomi up until 2020 was a cell phone company. They had never made a car. They only made cell phones. They got pretty good at making cell phone handsets. And then their CEO woke up one day and said, basically what a car is going to be now is it's a battery connected to a lot of electronics and a drivetrain. And we know how to make the batteries. We know how to do the electronics. All we have to do is connect that to the drivetrain.
Right.
We can make cars. And so within 5 years, they were able not only to make cars, but make really good cars that were competitive because they could plug into this ecosystem of component makers,
Mm-hmm.
process knowledge, a whole manufacturing setup that exists basically nowhere else in the world
Yeah,
except
yeah.
in China. And I think people don't quite, outside China, don't quite realize what the power of that ecosystem is. And yeah, again, to your point, if you say, oh, we got to compete, we've got to reshore this, that's a very, very heavy ask because you have to replicate not just, oh, let's give some subsidies to Ford or GM so that they can make electric cars. You're lacking the whole ecosystem. So some of this stuff, as you say, I think will have to be brought back, but you're going to have to be very selective about
Yeah,
what you do
exactly.
and cognizant that you're taking on a lot of costs and you're not going to be able to do things as efficiently as the Chinese. And you just got to be able to live with that for as many years as it
Mm-hmm.
takes to solidify it. So it's going to be a very competitive environment, I think, for many years to come.
Yeah, yeah, and now Xiaomi, they just I think it was a few weeks ago announced their first humanoid robot,
Right.
which these auto manufacturers I think are
Right.
realizing, wow, everything that to build a robot, it's a lot like building a car.
Right.
There's a lot of similarities,
Right.
and
But
that'll
they
be
do need hands, which cars don't have. That's the
the
tough
hands
part.
are tough. The
Yeah.
hands are expensive.
Yeah.
I think that's interesting because just as in my indexing the definition of China. If you looked at MSCI China 15 years ago, 50% financials and energy, and
Right.
you throw in industrials, materials, and real estate. It's this huge value factor,
Right. Right.
which explains the why performance was so poor. Tech was only 2% of MSCI China,
Right.
but similarly, Dragon Economics is evolving, and I know
Right.
you're putting a really just as China's economy's evolved and the market indices, you're doing a lot more in and around the tech. You've got a
Right.
new effort, and love to hear a little bit of
Yeah.
what you're doing there.
Yeah. So, as I described, basically China is this two-track
Mm-hmm.
economy, and the overall macro picture is not terrible. And if you want to talk about it, I can explain why China today should not be compared to Japan in the 1990s. It's a much more dynamic place. But even so, at the macro level, it's got a lot of challenges, right? But the tech sector is very vibrant. So, as a research company, basically what we decided is we need to focus a lot more effort in that area. So we launched just earlier this year a new service called Gavekal Technology, where the focus is looking at technology sectors where the rise of China and geopolitical influences are playing a bigger role.
Hmm.
Um, and I think it's easy to imagine that that territory is only going to expand over time. China is going to keep growing, and the geopolitical influences are going to be a big part of the story. So what we're focusing on right now is we started with semiconductors
Okay.
because that clearly is a huge area of concern. The Chinese have been putting huge amounts of money into creating an independent semiconductor system, but it also has a lot of spillovers. So you want to
Mm-hmm.
talk about AI, for example, the physical basis of that is the chips that you use to make that. So how is Chinese AI development being
Mm-hmm.
affected by U.S. chip export controls? Spoiler alert, not that much actually. They're doing very well
Okay.
in AI. Robotics, a lot of that depends on semiconductor and AI inputs
For
because
sure.
what makes the robot, it's the brain.
Yep.
So all of those sectors related to semiconductors, AI, robotics is part of what we're looking at. And then in the new year, we're going to be launching another module on new energy because
Okay.
again, electric vehicles, renewable energy
Yes.
generation equipment, the whole electrification story in China, which is really very interesting and undercovered. Um, again, an area where China is very competent, going to be globally significant. And this is going to create some real choices for the US and
Yep.
Europe. How do we maintain the parts of the industrial system that we want to against this onslaught of Chinese competition? So that's personally where I'm devoting most of
Okay.
my efforts these days. It's less on the traditional macro stuff and more on the technology stuff because frankly that's where the action is.
Yeah, and for us as investors, that's where the action
Yeah.
is. And so, yeah, traditional China, obviously, very important, big part of the economy. But you really see these new drivers, and then you see that government support. We had the draft of the 15th 5-year plan. We had this Politburo release, and then this morning we had the Central Economic Work Committee, very focused on domestic consumption.
Right.
But I think on the semiconductor side, yeah, we really view the embodied intelligence as really the nitrous oxide for humanoid robotics.
Yep.
That these things are basically remote control cars, but you put that AI and clearly what's your take? I mean, there's the number one question we're always asked is how far away is China from having its own NVIDIA?
Pretty far,
Yeah,
right? So I would make a division here. If you're looking at that slice of things, um, basically Chinese AI developers are really good. And they have learned to work around these constraints that they have on access to the most advanced NVIDIA
Yep.
chips. Now, again, that's changing because President Trump just the other day gave the green light for NVIDIA
Yeah.
to export a higher generation of chips to China, and that is probably going to have a positive impact. But even without that, they've done a very good job at figuring out how to do more with less. And the business model that they're pursuing is a little bit different than the AI developers in the U.S. So if you look at OpenAI, Anthropic, these guys, what they're basically trying to do is to get consumers and businesses to buy subscriptions to large language models and then apply them in various ways. But their main revenue model is software subscriptions. In China, people won't pay for software subscriptions. So what the companies are focusing on is, yeah, in overseas markets, if we can get people to sign up for the software, great.
Right.
And a lot of people in Silicon Valley are actually now using Chinese AI models. Why? Because they're way cheaper and pretty functional.
Open architecture.
Open architecture, so you can fiddle with them as much as you want. But what they're also looking at is we've got a really great manufacturing ecosystem in China. Let's look at the embodied application of AI in humanoid robots, industrial automation,
Yep.
consumer appliances, and so forth. And so what AI is likely to do in China is give their whole manufacturing ecosystem yet another advantage because as things become more automated and artificial intelligence driven, China's going to have the edge in figuring out how to do that effectively. And just on the robot side, what I'd say is humanoids is interesting, but I do think that there are some, challenges in how fast you can adopt there. But you look at the industrial automation, so non-humanoid robots working in factories, China is moving very, very rapidly to automate as many of its factories as it can intelligently. And very important for China because they're facing a demographic challenge where the population is now shrinking, working population shrinking even more. They can't rely on this enormous pool of human labor in the future the way they could in the past. They know this, and so they are doubling down on automation in all its forms. So that side, very, very optimistic that the Chinese are going to be at the forefront at figuring that stuff out. Making chips is really, really hard. Just the most complicated industrial process in the world, involves many, many different kinds of tools. A lot of the tools don't work unless you have the people who know how to use them, and that constantly changes, and the tools have to work together. So if you just look at the chip manufacturing side of things, China is still well behind. And it's going to take them, not only NVIDIA in terms of the design, but TSMC in terms of the production. It is going to take them a very, very long time to catch up. They're trying hard. They're putting a lot of money behind it. You see, particularly in the design space, you see some very good companies. But the manufacturing is going to be really, really tough. So I think we do have to be, even though the overall view on China technology, it's very impressive, but we have to recognize that there's some things that they're really, really good at and already at the frontier on, and other sectors where they're still lagging, and it's not just like a few years, it's a really, really long learning curve for them. So semiconductor hardware is really the most difficult part of the equation.
I think at the high end, it's going to be really, really difficult. But you're seeing inroads on the lower end, and
for sure.
That's your base. But I think that's a big part of our thesis is it's gonna take time. Now on the clean energy, I mean that's an area that self-serving and highly biased. We're big proponents in as well. That we listed a China Clean Tech Fund really from our experience in going to China. Well over a decade ago, I remember in the 2013 being in Beijing and it was snowing, and it's like that's not snow. And then uh, I had asthma as a kid, and I actually it was a few years ago, but I actually ran in a Beijing park, and because it was a beautiful blue sky, and so we saw that investment, and then it's kind of funny on the clean on the car EV side. Actually, John Crane and I were in Beijing. It was July of 2017, and we walked by first we left the JW Marriott in Beijing, and first we walked by an Apple store, and it was just packed.
Yes.
And then we walked by a Tesla showroom, and it was crowded. And at the time, Tesla was very controversial, and but certainly I think we see, I really don't like this idea that we're in this AI race. I don't like looking at it as a lens through that lens, but people do. But even today's I didn't read the article, Caleb, but the front page of the Wall Street Journal was, oh, if it's an AI race, China has all this cheap renewable energy, and this is something that they've been at for many years. But what's your take on the China clean energy besides the?
That's a very good point. I want to make first a comment just on the whole AI race idea. Clearly, there's a competition, right? And clearly, the main players in the competition are the U.S. developers and Chinese developers. The problem with the race metaphor is that it implies there's a finish line. And someone gets the finish line and they win and it's the end. And it's no, this is an evolving technology. It is a dynamic, fluid competition. The competitive strengths of the US and China are both formidable, but they are in somewhat different areas. And so what you're likely to see is both countries producing companies that are really good at different aspects of this. I'm not a believer, as some people are, in the whole artificial and general intelligence thing. That if you believe that, then there is a finish line. Whoever gets there first wins. They're the king of the world forever. I don't believe that. I think
nor do I.
That this is more of it's exciting technology, but it's still in the realm of a normal technology that will create a variety of different value chains and a lot of different winners of different kinds, right? And I think it is important for the U.S. as a country to think about how we can play that game most effectively and generate as much of the value here as possible. But there's no race in the sense of an ultimate winner or loser. It's just an ongoing dynamic, right? So and so then when you look at what are the relative strengths and weaknesses that bring to bear, China's electrification system, I think, is something that people are only beginning to understand. So a couple of factoids here. So China's electrical generation capacity is about 30% more than the United States and Europe combined. The capacity of just renewable energy in China, wind and solar, excluding everything else, is more than the generation capacity of the entire United States. And they are still adding the equivalent of about a United Kingdom or France every year in terms of new generating capacity, right? So in terms of making electricity abundant, available everywhere, and cheap, China is way ahead in this game. The other thing that's really important that people really don't pay attention to is often, particularly with renewables, you need to generate the electricity in a place where, frankly, there aren't that many people or businesses. So like these open plains where the wind is blowing, or desert areas where the sun is shining. And so you have this problem of how do you get that power from where you're generating it to the users who could be 1,000 or 2,000 miles away? And the answer is you have to build a lot of ultra high voltage transmission lines that can transmit the electricity over long distances with relatively little loss, right? So conventional transmission lines, you lose a lot in transmission. The new generation of UHV lines, you can reduce those transmission loss. China has 40 UHV transmission lines commissioned. The US has none, right? So in terms of creating an electrical system that functions across the whole country and ties it together, they are really way ahead,
Yeah,
both in terms of the technology itself and the deployment. And then finally, they're also a global leader in batteries, both at the sort of car or phone level, but also at the grid scale level. And again, because renewable power is intermittent, you need to
Mm-hmm.
have better storage. So they have dealt with both the generation and the transmission and the storage in an integrated way.
Yeah.
So again, getting back to your ecosystem point, okay, US wants to play catch up there. It's not just about building a bunch more plants. It's like creating the whole system to make sure that the power that you generate
Right.
is transmitted and deployed efficiently across the whole country. And that is the work, not just like of a few years, that's, a decade or more,
Mm-hmm.
right? So that is a really big thing where China has invested heavily, they've invested effectively. So when I look at whether we're talking about AI or some of these other things, what's the problem that China faces, right? The problem is basically profitability. So they've
Yeah.
created this enormous
Yes.
ecosystem. They've created this generation of entrepreneurs who are really good at what they do. They've created an innovation ecosystem that enables people to lower costs, increase the quality of what they do. Great.
Yes.
But how do you make money off of it? And because the problem is they've put so much capital into it that there are tons and tons of competitors in every sector. Not all of them are profitable, but they stay in business because of local government subsidies or whatever, and they erode the profits for everyone else. So you have a great system in total, but not as much profit as you would like to
Yes.
see at the company level because there are too many players.
So
And so that is the problem that the government is beginning to grapple with.
this is anti-involution.
Right, yes. So the term that they use, it's a weird term translated from Chinese called involution. It just means basically excessive competition or excess capacity. That's basically what it means. Too many players in the market, so no one has pricing power.
Yeah.
And so the government is now saying, okay, we have the technology, that's great. Now we need to consolidate the industries so that the top guys, like the BYDs and cars or the CATLs and batteries or the Xiaomi's,
Yep.
that they can earn the profits that they deserve because they are at the top.
Yes.
Invest more in R&D and scale.
Yep.
Right. And that's going to take them a long time.
Yeah.
Is the challenge because there are just so many. You've got so much local government support. But I think it will happen, and I think it will happen partly because the government is after this, and partly because they've already started to tighten financial conditions in industry.
Mm-hmm.
So we talked about this enormous increase in bank loans that peaked 3 years ago. It's now shrinking. There's still plenty of credit if you're good,
Mm-hmm.
but the sheer availability of finance just for anyone who wants to get in this business is beginning to shrink. And so you begin to cull some of the people who just can't.
That's a really, really, really good insight, because I think there's one of the narratives is, China credit is so weak, it's shrinking, but that credit is part of what created the bubbles in these various industries.
Yeah, it's again in the tech sector, you actually want to see tightening financial conditions because that will lead to consolidation and more pricing power and more profits, right?
Yeah.
In the wider economy, weaker credit growth is a problem, right? So it's like you got too much credit in one part of the economy, maybe not enough somewhere else. And so you need, just as you had a reallocation for property into high-tech manufacturing, you kind of need a reallocation a little bit the other way now.
Yeah, and I mean, I mentioned, we've got a China clean tech ETF, and we've kind of followed two of the global leaders in solar panel manufacturing, Tongwei and Longyi. Incredible top line revenues, lose money. And it's interesting, when this anti-involution on July 1st, when President Xi wrote this article, but we saw very quickly, only a few days later, they called in all the solar companies, and we've seen polysilicon futures just kind of skyrocket. And Tongwei and Longyi still lost money in their Q3, as well as the August semi-annual, but the declines really did shrink. I mean, is it feasible we're seeing a little bit of the anti-involution,
Right. I think
the effect there.
solar is exactly the first place to start looking for this, because the problem that the central government has is it's not like, oh, we have too much competition in one or two sectors. They have too much competition everywhere,
Yeah.
right? So how do you, as a government, craft a policy that deals with everything everywhere all at once?
Yeah,
Right. That is a problem. So, and they recognize that. They say, well, okay, let's pick a few demonstration sectors which we think are fairly ripe targets and see if we can come up with a formula that works there. And one of the ones they picked is the solar value chain, because they looked at that and said, look, what's the solar value chain? It starts with basically the raw material, which is polysilicon. Right. If you can raise the prices, winnow the competition and raise the prices in polysilicon, that helps the guys making that stuff. But then it helps the Longies of the world downstream, because they can deal. They have the scale and the efficiency to deal with higher input costs, but their low price competitors can't. Right. So the theory is you raise the input costs in polysilicon by forcing consolidation in that sector, and then you get a cascade down the chain, because only the most efficient, biggest scale producers of the modules and the wafers can survive, and then it goes all the way to the end of the production chain. So that is, I think, a really good test case to see how well this is working. And the proof of success will be when those guys that you're talking about finally move into profitability, right? And I think that will be good for them, but then that will begin to set up a little bit of a game plan for how can you replicate this in other sectors. So we're looking at that very closely. As you say, we're not quite there yet, but they really only started this a few months ago, right? So this is something, our estimate, you're talking about, depending on the sector, like a 2 to 5 year process of moving from this complete profitless wasteland to something that is, where the winners really get rewarded, right? And solar would be, I think, one of the first beneficiaries.
Do you think an element is, this would help kind of shake China out of this little bit of a deflationary spiral, and could China go from exporting deflation to exporting inflation globally?
I'm not betting on that anytime.
Okay.
Right, yeah. So I think they've got a pretty significant disinflationary thing going on. Part of this is their manufacturing sector is so competitive. That is basically going to be somewhat disinflationary for a long time, because even if Chinese EV makers or battery makers or solar makers, they raise their prices, those prices are still so much lower than the rest of the world that they continue to pick up market share. So that is good for the Chinese makers in that, but it's a little bit of a challenge for the rest of the people in that world. So in those sectors, I think it's still disinflationary. I think if you want to get real sort of nominal growth and rising consumer prices in China, you can't do that just by constraining the supply side in this tech manufacturing, because that's not enough of the consumer basket, right? Mostly what people consume now is services. And China is subject to the law that every advanced economy goes through, that as you get richer, more and more of what people buy is services, and less is what it is stuff. So they need to have, on top of what they're doing in manufacturing, they need to have a strategy of really boosting demand. They need to have a demand side strategy, not just a supply side strategy. And they need to have, I think, some kind of a deregulatory strategy that allows more entrepreneurial dynamism in the service sector. And they're not quite there yet.
Okay, well, we were getting along really well up until that point, Arthur. But yeah, I think to your point, here in the U.S. we have NIMBY, not in my backyard. Right. In China, for the provincial governments, it's INBI. Like, oh, Shenzhen has a BYD. We want a BYD.
Right.
Oh, you've got a Longi. We want a Long. And so that as someone in Shenzhen once told me, they're like, we're far away from Beijing. That this idea of this omnipotent power,
it's overstated.
Local interests like we want employment,
Right.
and we want a car manufacturer, we want a solar panel, we want a wind. Now, obviously, we want to stay on track here, and obviously, I want again, if you'd like to receive Arthur's presentation, he's very generous. I mean, this is his intellectual property; it's his livelihood, but he's generously allowed us to share his presentation. Just email us at info@kraneshares.com. Also, please email any questions to info@kraneshares.com, or if you're joining us via the Zoom, we'll do the Q&A button. So let's see here. I'm just going to dive in here. So within your tech work, is there a China Mag 7? I mean, I think I'd say.
Yeah.
Well, actually, yeah.
Well, that's kind of an interesting question, because I think one of the transformations that we've seen is, if you just look at what we used to call China tech, was companies like Alibaba, Tencent, ByteDance, even though it's not listed, um, which were these essentially internet platforms.
Yes.
Right. And they, of course, they were very, very successful in the 20 teens, and then they got whacked in 2020 when the government did a crackdown. But they, even though they got this big regulatory setback, for the most part, their revenues and profits continued to grow.
Yeah.
And I think one of the big dislocations in the market, which has largely been corrected, is that their share prices became divorced from the reality of their business. The share price became way too low.
Correct.
And so I think, a significant part of the rally that you've seen overall in Chinese equities over the last year is a correction of that mistake, frankly, that people just missed the fact that, okay, yeah, there were certain things that Alibaba wanted to do, they can't do anymore, but they're still really good at what they can do. And they are busy transforming themselves partly into AI companies. And so if you look at Alibaba, for example, and compare it to Amazon, which is kind of an analog, Amazon Web Services has been one of the big drivers of Amazon's growth and valuation over the last 15 years. And Alibaba is basically making a move into the same territory. They are now looking to become the top Chinese cloud provider.
For sure.
They're almost certainly going to win that because their embedded advantages are terrific, and they're going to do it internationally. This is not going to just be a China only thing. They're going to be running data centers around the world, and they're going to be doing this with the full support of the Chinese government. So I'm a macro guy, so I'm not going to define a Mag 7, but I would say that if you look with the traditional Chinese tech champions in the internet, a few of these, notably Alibaba, are going to do quite well because they are pivoting into the AI universe, I think, very, very successfully. Right. So that's part of, if you will, the Chinese Mag 7. But then I think you have to look at who are going to be the big winners in the sort of the emerging spaces of tech, which is more on the hardware side. And there you basically, I think, look at the whole electric vehicle complex, right? And so it's not only the vehicle makers like BYD and Xiaomi, but it's also a company like CATL that controls the core battery technology. These are companies that are very aggressive, very dynamic. They don't have, if you're in a software business, you can build these moats through network effects that make it very difficult to compete. These guys are going to have to work harder, because you just can't do that in a manufacturing business to the same degree you can software. But their advantage is quite strong. And again, the ecosystem that they can take advantage of in China is matchless. So I'm very optimistic that those kinds of companies, the top of the top in the Chinese EV ecosystem in clean tech, those guys are going to do quite well. So I think you have to look both at sort of the traditional, if you will, internet platform companies and how well are they going to pivot into the AI universe. There are going to be some winners there, and then the top guys in the new ecosystem, particularly if there's some advanced technology. And this is why the batteries is important, because that's actually very tricky technology to get it right, and there's a lot of evolution that still is going to occur there. I think that's going to be a big source of comparative advantage for China generally, but also the leading companies there are going to do quite well and be able to protect their positions, I think, pretty well.
Yeah, I think BYD, CATL, just really, really impressive companies. One of the questions, Arthur, is you touched on why you don't believe China's headed down Japanification,
Right.
and one of the listeners asked if you could expound on that.
Yeah, well, this is really important. This is a very popular theme a couple of years
Mhm.
ago when China came out of COVID. It was kind of like it wasn't that great. They had deflation. Everyone said, "Oh, it's just like Japan in 1990." And no, so here are the reasons why it's not. So number one is if you just look at the financial structure of Japan versus China. Japan in 1990, they built this very successful economy, but there was one balance sheet for the entire economy because the banks all owned equity stakes in the
Right.
industrial companies. The industrial stake companies all owned stakes in the bank. So there was an integrated balance sheet. And what was at the bottom of the balance sheet was land prices, which had grown by a factor of 6, I think, over the course of the 1980s. And so as land prices collapsed, the balance sheet of industrial Japan and financial Japan collapsed at the same time. And it meant that financial Japan was no longer able to support new investments in new industries to offset the declines elsewhere. China has never permitted that. The financial and the industrial systems are completely different. So, yeah, you have a property bust. Most of the big banks are not actually exposed to the property bust. It's the smaller local banks. And yeah, so you could have this property bust, but as I pointed out, the money that was not going into property just got moved over into high tech. So instead of investment in property and investment in industry going down together, in China, investment in property went down and investment in industry exploded. So that's number one big difference is the financial architecture completely different and enabled China to do different things. Second point is if you think about how Japan was industrially positioned in 1990, they had built a great set of companies that were good for the pre-internet economy, the non-networked economy of kind of autonomous industrial units.
Okay.
They were not positioned to take advantage of the network economy that emerged 3 years later with the internet, including in semiconductors. And so they missed the boat of sort of the transformational industry of the 1990s. Now, if you think about, okay, what today would be the equivalence of the internet back in the early 1990s, transformational industries of the future? My list would be AI, green energy, and semiconductors. And in two of the three, China is unquestionably at the frontier and moving very fast. Semiconductors, they're not there totally, but they're moving hard to catch up. So they're much better positioned to capture the industries of the future. And then finally, Japan basically was part of the US security envelope. So they could say, the economy's not so great. We're going through deflation. We can let this run for 10 or 20 years, and it's not going to hurt us that much because at the end of the day, our security is provided by the US. China does not have that luxury. They are all alone. And they say, we have to be good enough to push back against the United States and be technologically self-sufficient. So they have a very strong motivation to get it right. It doesn't guarantee that they will get it right, but the motivation helps. So in all those dimensions, China today looks a lot different than Japan. Yeah, they have property bust. Yeah, they have some deflation, and that's basically where the resemblance.
So one of the questions was just from our friend Kevin, who asked just about, we've seen this weak domestic consumption, I think really driven by the collapse in consumer confidence, driven by the collapse in home prices, and just particularly in these lower tier cities, it's from peak to trough, it's a real wipeout. But what do you envision we see, particularly maybe with the draft of the 15th year plan? Today's Central Economic Work Conference, which came out after the local markets closed, and it's just domestic consumption. How are they going to stimulate this consumption? Obviously, we've seen subsidies. We've seen them saying they're going to do more of these special long-term treasury bonds and more subsidies. But what else can they do to stimulate the consumer in 2026 and going forward?
I think this is a really important question. I think we can maybe agree to have different perspectives in this because I think so what is very clear is that there has been a major rhetorical shift by the Chinese government. So up until about a year ago, they weren't talking about consumption at all. It was all about the supply side. It was all about investments in technology. You read every policy document. That's all there was. And there was nothing on consumption. And now what you've seen gradually over the last year and sort of culminating in the documents that you talked about is a lot more talking about consumption. And that's important because what it says is the government officials are, and particularly the top guy, Xi Jinping, recognize that this is a problem, right? A year plus ago, they didn't even think this was a problem. So the start of solving a problem is recognizing that it is a problem, and they have clearly done that, right? So I think that's very positive. Where I'm disappointed, I would say, is if you look at what they've actually done over the last year, it's not that much. So there's been a lot of talking, but they have not really attacked the root of the problem, and they've tried to make it easier for people to like trade in their cell phones and get new household appliances and so forth. But that really doesn't address the underlying issue there. So I think the question is, at what speed will they translate this rhetorical shift into action? And do they really decide that they've decided that not enough consumption is a problem? Have they really decided that deflation is a problem? Because that, I think, is the issue. Is up until now, they've sort of had the view, well, deflation means things are cheaper.
Yeah.
It's good that things are cheaper. Things are more affordable, right? It's like the opposite of the US discussion. And, and the economists have to go to them and say, well, yeah, actually, that's sort of true, but actually, you can have too much of a good thing. And that's what you have right now is too much of that. And again, I think what I'm looking for, and it'll be interesting to see what you see in the budget that comes out in March, some of the implementation of the plans is, do they start to say, yeah, we actually need to stimulate aggregate demand. We need to have a demand policy. And so it's not just about making better quality consumer goods available, which is a lot of what they've been talking about. It's like, if only people made better things, then people would spend more on the better things. Like, no, they won't do that unless they have more confidence. So you got to have more of a demand strategy, and they may get there, right? And I think it's a question of what you want to look for is how fast do they move from talking about consumption to talking about demand, and what can we do to really boost consumer confidence and make consumers feel better about their position. And when you start to see things that, and they're beginning to do some things, subsidies for people with small children, those are good because people with families, growing families, if you give them an opportunity to spend money, they will spend money, right? So putting more money into the pockets of people with small children, thinking of having small children, that's actually a pretty good demand side stimulus because you're giving it to people, you're giving money to people who will go out and spend it. And so the first thing I would look for is how much are they going to ramp up those subsidies? They could ramp them up a lot more than they have now. That would be a strong signal that they're starting to get serious about. Let's just look at demand and how do we push up demand and confidence.
Yeah, it's interesting to see this emphasis on domestic tourism and cultural and winter wonderlands and and then you're like, well, I get it. I got to get on a high-speed rail, I got to rent a hotel, I got to pay for a tour, I'm going to go out and eat, and you see the net. Okay, like if someone takes the train from Shanghai up to Harbin, and they're going to spend it's all about spending there.
Yeah, but the problem is if you focus, and this has been the problem with a lot of what they've done so far, is they say, let's create more opportunities for people to spend. Let's create higher quality goods and services. And so what happens is, people diversify what they're spending on, but there's this continuous downgrading. Yeah, I'll spend on the vacation, but I'll spend less. I'll only spend 40 renminbi on my meal instead of 100, right? And so you get the volume, but what you want to get is the value, right? And you don't get the value unless people are comfortable and feeling confident that, I'll spend the extra amount. So people are willing to spend more in different areas, but they're penny pinching in each area, right? And that's the psychology that you need to break. And that's the next step that we need to see in policy. How are they going to break that penny pinching psychology?
Okay. And Arthur, where does one go to learn more about Gavekal Dragonomics?
Well, you can go to our website. That is the simplest point. Most of it is behind a paywall, but if you go to the website, it will invite you to come in. There are a few things that you can see for free, and We have very liberal trial policy. Happy for people to take a look under hood for a few months to see what we do. As you noted, we pump out a lot of stuff, so you can get a good sense pretty quickly. And we're, as I mentioned, we're diversifying our offerings. So there's a lot of different things that you can look at, both in terms of the macro economy and some of the stuff specifically that's going on in tech. Um, and we're always, I and my colleagues at the partner level and the analyst level, we're always happy to, jump on the phone, do a conference call with people who are thinking about us to, dive a little bit more deeply into our ideas. We have a very high touch. Our philosophy is we don't want to just pump out the reports. We want to be talking to our client all the time in as many ways as we can, because that's how we learn about what people are interested in and how we have to adjust our research focus. It's really getting the feedback from the
For sure, for sure.
So go to the website, sign up, and then schedule a call with one of us, and we'll be happy to pick up.
Okay, and something that we, as consumers of your work, we recommend you do, and certainly, yeah, Arthur, this has been fantastic. Really appreciate your insights. Hopefully, you'll come back and join us in the future, but certainly hope you and your loved ones have a happy and safe holiday season.
Great, thank you so much.
Thank you, Arthur.
Great to talk.
Likewise.
Great.